All right, welcome to another quick bite explainer from the Insurance Domain Training Center. Let's just dive right in. Now, we all know the inherent physical risks of crossing oceans, right? Massive storms, rough seas. But today we're focusing on a completely different beast. We're talking about the highly unpredictable elements of human behavior. You see, engineering a massive ship to survive a hurricane is one thing, but surviving human volatility, well, that's where the real challenge lies. So let's unpack exactly how the maritime industry shields its most valuable assets from sudden global social chaos, and maybe more importantly, the resulting financial fallout. It brings up a really critical challenge. How exactly do ships navigate social unrest? Think about it for a second. You're trying to protect a multi-million-dollar asset, packed with cargo of immense value, and it docks in a port that suddenly erupts into political or social chaos. International waters and foreign ports can be incredibly volatile. I mean, a shipping route that is perfectly stable one month can literally become a hotspot of civil disorder the next. For ship owners and cargo owners, the financial exposure here is just astronomical. If a major port is shut down by protests or a vessel is actively targeted by vandals, who actually foots that bill? How do stakeholders survive these completely unpredictable disruptions without facing total financial ruin? Well, the specialized safety net for these exact scenarios is known as the SRCC clause. That stands for strikes, riots, civil commotions, and malicious damage. This is a vital, distinct layer of marine insurance specifically engineered to cover loss or damage caused by political or social unrest. Because standard marine policies alone, they might leave a ship owner completely exposed to the unpredictable nature of human conflict. The SRCC clause basically acknowledges that while the oceans themselves are turbulent, the human elements waiting at the ports or, even crewing the ships themselves can trigger catastrophic financial losses if they're left unmitigated. Okay, let's break down the details of what this actually covers because, as always, the devil is totally in the fine print. First up, the clause primarily addresses labor disputes, meaning if dock workers, port authorities, or even your own crew decide to strike and the cargo just completely stops moving, you're covered. It also protects your assets if they happen to get caught in the crossfire of violent riots, widespread protests, or general civil disorder. Then add to that malicious damage, which covers intentional vandalism or deliberate sabotage targeted directly at the ship or its cargo. And it even extends to terrorism. Though a quick warning on that one, you always have to keep a really close eye on specific insurer limitations and exclusions there. Now, understanding the boundaries of this coverage is absolutely crucial. Beyond just covering physical damage to the ship or the goods, SRCC can cover what's called loss of hire. That's the vital income lost when a vessel is completely immobilized by a covered event. It also shoulders massive additional expenses, like the sudden need for salvage operations or aggressively rerouting a vessel to a safer port, and even third-party liability. But it definitely doesn't cover everything. Acts of war and nuclear risks? Those are strictly excluded across the board. Mere delay isn't covered either, unless it's explicitly negotiated into your policy. And of course, there is no coverage for inherent vice, which is really just the insurance industry's fancy way of saying your cargo of apples decided to rot entirely on its own. Let's actually put this into practice to see how it operates in the real world. Picture this. A massive cargo ship arrives perfectly on schedule, only to be entirely paralyzed by a sudden dock worker strike. The cranes stop moving. The cargo just sits there. Immediately, the shipowner begins bleeding operational income, suffering a massive loss of hire for every single hour that vessel is trapped at the dock. Well, this is exactly where the true value of the policy shines. Because the delay was directly caused by a covered strike, the SRCC clause activates. It steps in to cover that lost income and prevents what could otherwise be a catastrophic financial blow to the company. So, what does this all mean for the industry? Ultimately, SRCC coverage is a fundamental pillar of global trade. Because vessels and cargo are constantly exposed to shifting political instability and sudden labor disputes around the world, this specific coverage is a completely non-negotiable risk management tool. It essentially functions as the crucial barrier between a shipping company and total financial ruin caused by entirely unpredictable human events. Having this in place provides the ultimate peace of mind needed by stakeholders in the maritime industry. It allows them to operate confidently and aggressively, knowing their highly valuable assets are shielded from sudden global chaos. Now, while SRCC is considered a pretty standard feature in marine insurance worldwide, I've got a critical piece of insider advice for you. Its underlying purpose might be consistent, but the fine print absolutely is not. Terms, conditions, and exclusions vary wildly between different countries and different insurers. You simply cannot assume all SRCC clauses are created equal. Ship owners and cargo owners must actively scrutinize their specific wording. You need to ensure for sure that your unique routes, your specific cargo, and your operational timelines aren't going to be caught in some unexpected loophole right when you need the coverage the most. So, we've seen how the SRCC clause bridges the massive gap between the physical dangers of the sea and the political dangers of the port. But in a constantly shifting global landscape, understanding the limits of that protection matters more than ever before. So I want to leave you with this to consider today. When sudden social unrest can completely halt operations halfway across the globe in an instant, is your cargo truly secure? Have you actually scrutinized your SRCC clause lately? Thanks for joining me for this explainer. And remember to keep asking the tough questions about your risk management strategies.
Thank you for watching the Quick Bite series from www.insuedot.com. Please like and subscribe to our videos for you to get notification when we upload new videos.